it's interesting to me how many people come in and forget they had a kid last year. That's usually one of those really big events that, tends to stick in your mind. And yet, every couple of years, I tend to get somebody that forgets about their kid. And so then you catch it the next year, or you see them in church and you go, oh, you had a kid. We need to fix your tax return. And with the way they keep adjusting the child tax credit, it used to be $1,000 per child. Now it's $2,000 per child. Now with the new legislation that was just signed in last week, it's going to be $3,000 per child, plus you get the $1,400 in additional stimulus payment for this third go round of the stimulus. So if you forgot your child, you missed the $500 that you would have gotten in May or June of 2020. You would have missed the additional $600 you would have gotten January of 2021, and you could potentially be missing out on the $1,400 that you would be getting in sometime in 2021 for that third payment. The nice thing is that with that, once you file the return, you can request those additional stimulus payments if you're within those qualifying parameters and you haven't exceeded the income limitation. You can still get those credits as a credit against tax on your current tax return. So when I've got all my clients coming in right now, I'm asking them, because I can't worry about the third one yet, but the first two stimulus payments that came out, if you did not get the full amount, you need to make sure that you request it, the balance of it, on your 2020 tax return, because you're entitled to it as long as you are under the income threshold or the phase out. So that's a big one. Whether or not you got married, we need to add your spouse to your tax return, or if you moved. Now, the moving isn't usually a huge deal, except for if you change school districts, because then on the Iowa return, the school district surcharge changes from school district to school district. And if you don't get yourself put in the right school district in the right county, and like being in Belle Plaine, you can have a Belle Plaine address and live in 4 different counties. And so you could live and have a Belle Plaine address, but be in Iowa Valley's school district, and they have a different school district surcharge. And in the last few years, I've had a couple of clients that have gotten caught because we had them in the wrong school district. Well, several of these clients were literally right on the line, and if you walk 10 feet outside of their house, they were in the other school district. So, those are some common errors and some common things that we've seen, in just basics of getting the information in. Another common error we see, or another issue that we see regularly, is in regards to estimates. So if you're a person that is making estimates, the estimates are, you've got the first 3 quarters are all due in the tax year that you're paying, that you'll be filing the tax return on. The 4th quarter estimate is not technically due for federal until January 15th of the following year and January 30th of the following year for the states. Well, the problem we run into is that I have several clients, and I've had this experience over the years, where they forget to include that estimate, on their tax return for 2020. And Iowa considers that 4th quarter estimate, if you don't make it before the end of December of the year that you're filing the tax return for, they consider that towards next year. And so you've got to go back and make those adjustments. And so it's always important to make sure that you know when you're making your estimates and how it's going to reflect on your tax return. Because down at the bottom of the first page of the Iowa 1040, it talks about your federal estimates that were made in, for example, 2020. Well, if you made your 4th quarter one in 2021, you don't get to show that as estimates that were made in 2020, and it affects your tax bracket. The other thing I often see is, when I ask somebody that's been filing estimates, what'd you pay for estimates for the year? And usually the response I get includes the amount of tax that they paid for the previous year. So you've always got to be real careful that you separate those out for your tax preparer. And if they give you a worksheet that says, this is the amount that's due, and it's got blanks that says, this is your check number, this is when you paid it, and this is how much you paid, fill those out and give them to your tax preparer, because it makes their life way simpler. If you paid additional federal or state tax, make sure you keep that separate, because you get the additional state tax shows up as an itemized deduction on your Schedule A, and your additional federal tax that you would have paid for the previous year shows up on your Iowa return. So you need to make sure you have that information and that it's being reported. In addition, if you paid self-employment tax because you're self-employed and you're a Schedule C or a Schedule F filer, you want to make sure that that is showing up on your Iowa return because it's considered a deduction and has to be dealt with on that return. You don't want to forget that because nobody likes love letters from the IRS or the DNR or the Department of Revenue, especially not your tax preparer. The other thing that we need to make sure that we see is if you got a letter from the IRS or from the Department of Revenue that adjusted either your refund or the amount that you owed, number one, get that to your tax person as soon as you get it. Because in 2020, we saw a ton of tax returns where we sent in the tax return and the payment. They cashed our check and told us we didn't pay. They cashed our check and told us we didn't file, and they've messed it all up. But if they make an adjustment, then that also, we need to adjust that in our software going forward so that, you know, if you were supposed to get an $800 refund and the IRS adjusted it and you had a $1,000 refund, I need to show that refund on your state differently than what my software will automatically update from the year before. Because the nice thing about all the software programs, and our office has used a couple different ones over the years, is they typically carry some of that information forward from the prior year. So if you don't tell us that you got an adjustment, then the problem we run into is then we get a love letter that says, no, you had more refund than what you reported, and now you owe us more tax. So those are just a few things. We always try and verify when you bring in your tax return, are you still using the same bank account information? Are you still in the same place? And now all of the software that we've been using requires us to gather a copy of your driver's license so that we can verify your identity, because apparently identity theft for tax returns is a huge thing, and the IRS hasn't figured out that you should only let 1 or 2 refunds go into one bank account. You know, by the time you have 100 refunds go into the same bank account, there's probably a good chance of fraud. But the IRS hasn't figured out how to put the filter on that. So instead, they flip it over to the tax professional and says, please verify everybody's identity by getting a copy of their driver's license so you know who they are, and help us combat fraud that way. So those are just some of the things that we've been seeing that, you know, if you have that stuff and you put it in your packet when you drop it off to your tax preparer, makes things go a lot faster, gets them processed faster because we're not calling you for additional information. Income sources. Kind of the two that we tend to see once in a while that we miss are 1099s regarding retirement plans if you made withdrawals from those. 1099 miscellaneouses, whether it's rent or non-employee compensation, or you want a prize as part of your employment, or you had your office reimbursed you for something, but they treated it as non-employee compensation. There's a lot of people that forget to bring some of those things in when those happen. Usually that results in a love letter from the IRS, at which point we then deal with it, because I never trust the IRS's calculations, especially after 2020 and when they were shut down, because it has just been atrocious. The other one that we see is cancellation of debt. And the thing with cancellation of debt that we've run into is that, if you were to file bankruptcy or if you were to negotiate a settlement on your credit card, a lot of times the credit card company will cancel debt. Well, they don't cancel the debt usually in the year that you file bankruptcy or you settle it. It's usually 2 or 3 years down the road when you get the 1099 that says you've canceled the debt. That is considered income unless there's some specific parameters that you meet. And so I get a lot of people that are upset with that because they don't realize that that's actually considered income to them. So kind of a couple other things that we've seen, especially with older people or people in the nursing home, you get that phone call that says, this is the IRS revenue agent. You have to go wire transfer me $3,000 because we're going to show up with the sheriff and arrest you. The IRS does not call anybody. Some days I wonder whether or not the IRS actually has a phone because they never seem to answer it. You know, since COVID hit, most of the IRS people that are able to are still working from home. And you can usually spend a good hour, hour and a half on the phone just trying to get a live body. And they will never call you because they will send you letter after letter after letter after letter, you know, trying to get it resolved. So if you ever get a phone call from somebody claiming to be from the IRS, it's fraud. You can just assume it's fraud, you know, and move on. Hang up the phone, don't give them any information, and just say enough's enough.